So let's just dive straight to it. I actually have a couple of lists of things I feel like are very important for you. Right? I know I've actually discussed this with you before, but it's good to always continuously refresh it so that you keep having it at the back of your mind. Because at the end of the day, trading is more of a psychological thing than a practical thing rather. So it's something that you need to always understand. You need to get into your head most of the time. Okay. So these are like a list of the things that I feel like are very important that you need to follow religiously. You need to go through them always. You can even screenshot it so that you keep, meditating on it day and night. Like, okay, okay, if I don't do this, I will not become successful. If I don't do this, I won't become. You understand? So the first thing on my list is having a well-defined setup. If you could remember from the start, I used an example, like let's say use sports bet as an example. You want to play a sports bet, right? You picked Liverpool for an example now, and you decided that okay, from beginning of this season to the end, I'm only going to play Liverpool alone. Every ticket I'm going to play is just Liverpool versus this, just Liverpool. You're not playing any other. You're not adding anything to the ticket. Or one day you're not deciding that okay, Liverpool they've lost too much in a row. I'm not going to play them this week. I'm going to play maybe Man City because Man City are in form. No, it's just Liverpool. You just keep playing them religiously till the end of the season. Because why did you get this confidence in them? Is because you've checked, let's say, their last two seasons, right? You've analyzed their performances. That if you had carried them throughout the season to the end of the season in every match, just them alone, and you've staked let's say 1% on each of those match. At the end of the season, if you calculate your profit and loss, you realize that you made money at the end of the season, right? So that is the same thing with a strategy. You've tested it previously, and you've realized that yes, if you play or if you take this strategy for the next, let's say, 15 to 20 trades, and then you check, you become profitable or you end up profitable. So the first thing is to have a well-defined setup that okay, yes, this is what I want to do, and it takes time to actually develop. You understand? It takes time to finally start getting in the flow that yes, this is what I've been seeing so far happen in the market. This is what I want to go with. This is what I've decided to go with. So it takes time, you doing a lot of different things, testing, trying different things, learning different things and all, until you now start getting a feel, a flow of okay, this is what I want to do. This is what I feel like is the strategy I want to focus on. Okay? So it takes time. So that is one. Then the thing is that I've actually been trying to help you out to develop a setup based on what support and resistance. If it's coming to support, you're buying. If it's coming to resistance, you're selling, right? There are thousands of strategies different traders develop. Okay. So ours is when it's coming to support, we buy. And when it's coming to resistance, we sell. The only work we have is to just define where our support and resistance is. Once you look at the chart, if you see that it's just forming a zigzag, right, you'll be able to just outline it. The resistance is at the top, the support is at the down, right? That's just it. And then when it's coming to support, you're looking for a buy. When it's coming to your resistance, you're looking for a sell. Okay, you see how easy it is. And the reason why support and resistance is a more favorable strategy, in my opinion, to trade is because most of the time market trends 30% of the time and it consolidates 70% of the time. So within that consolidation is where you get most of the opportunities in the market to trade. When it's coming to support, you buy. But the problem is for you to just be able to recognize where a support and resistance is actually forming. You understand? So the first thing is to have a well-defined setup. If you want to be on your own, that okay, yes, now I want to just be trading on my own, right, with money. You must make sure that you have a well-defined setup that without this thing, if you're not seeing this thing in the market, I'm out. I'm not trading anything. Even if Bitcoin is going to 1 million, as long as or any asset you're trading is going to the moon or the rooftop, as long as you're not seeing your setup develop, you're not trading anything. You understand? So the first one is have a well-defined setup. You must have a well-defined setup. Okay. So the second thing on my list now is that you must be patient enough for that setup to develop. Just like I said, if you're not seeing anything, if there's no support and resistance developing, there's no need of going into the market and trying to formulate a support and resistance out of what is not really developing. Okay, so you just have to leave it. If you don't see any support and resistance developing, you leave the market for the meantime for what it is. Okay, that is the reason why a lot of people don't make money in trading, is because they keep hopping from one strategy to another, one strategy to another. If they see support and resistance this week and then it's playing out in their favor, they are happy, they are making money, or they are taking trades. Then let's say the next 2 weeks there's no support and resistance to play. A lot of people just get bored and they're like, before you know it, they are already in the market trying to analyze something else and redefine a new strategy and all. And before you know it, let's say they take a trade, they're like, okay, yes, it seems like this is the strategy I can reinvent, right? And then at the end of the day, if that strategy is not working, now they before you know, they are hopping into from one strategy to another. They've not given that first strategy the time to develop and mature and help them make money. So trading is a game of patience. You have to be patient enough to wait for your strategy. Okay, wait for that strategy to develop. So number two is to be patient enough for that setup to develop. Now you have a well-defined setup. Number two is to what? Be patient for that setup to develop. Okay. So number two is techniques now to develop patience for your setup, because it's easier. What I've got to realize is that it is easier said than done. That patience, you should be patient for your setup to develop, right? A lot of people have a well-defined setup, and the next thing now is for them to be patient for this setup to develop. That is where the problem. In fact, I feel like that is the most difficult thing you're going to face when you eventually have a well-defined setup, is the patience now for the setup to develop. And I'm just going to give you a few techniques on how I think you can be patient enough for your setup to develop. Why? One of the techniques is what? Have other sources of income. Okay? The market is, how will I put it? The market most of the time will not present to you your trade setup. There are some times in the market where I go like 2 weeks without taking a trade. Like last week, I didn't take any trade because there was no setup presenting itself based on my own strategy. Okay, so what do I do? Do I go inside and start looking for something is setting up? Should I go in? Should I not go in? You understand? No, I just look at the market. My setup is not developing. I get out until my setup is developing. That's when I now start paying attention. So one of the things I've realized is to help you develop patience is to have other sources of income. Okay, for the meantime, you should be able to have other sources of income, so that when you come into the market, you're not depending solely on trading to make money. So that let's say you need money to pay your bills and all, and then there's no money, and then you're coming into the market with frustration, you'll be forced to want to take a trade that is outside your setup. So you need to have other sources of income at least, so that it will be helping you when your setup is not presenting itself right. You won't start looking for something outside of your setup to take. Okay, have other sources of income. It's very important. Okay. Then the second is to back test your setup regularly in order to build confidence in it. Okay, just like I explained with the Liverpool stuff, right? You now go back to like last 2 seasons or last 3 seasons and check different matches that Liverpool played. Okay, at the end of the season, what did they come out with? Were they profitable? If I was putting 1% of my capital into just Liverpool alone, at the end of the season, will I have made money or not? If you had checked that now, right, last 3 seasons, last 2 seasons, and then you made money, it will give you a confidence boost as to want to repeat the same thing for this season. That is the same thing with backtesting your strategy. If you have a well-defined strategy, just go back in time, test it, right? Okay, every time price comes to support and resistance, how many times did it? How many times when it comes to a support, how many times did it rally to the top, right, or went up? Okay, so you just with that you're able to start building confidence in that strategy, so that when next you see it, you'll be able to be confident enough to take it, even if it doesn't go where you'll be like, okay, sometimes it doesn't work, but sometimes it works, and at the end of, let's say, few trades, it is usually profitable. Do you understand? Or you eventually make money. Do you understand? And then the next thing you need to understand is that it takes time, right? It takes time to even develop your strategy, time to be back testing it and all of that before you start getting a feel or used to it. It takes time. Okay. So the number three techniques to develop patience for your setup is to have other sources of income to help ease the pressure, so that when you're not when your setup is not developing, you're not coming into here to look for quick money, right? You're waiting for it to develop. So, and second is to backtest regularly in order to build confidence, and it takes time. Okay, so those are the important techniques I feel like is okay for you to be able to build your confidence in your strategy. Then the next thing I want you to understand is risk management. You understand? I usually say risk management is the holy grail of trading. If you don't have a proper risk management, you will not last long in the market. Okay, risk management is what is going to help continuously protect your capital. The best traders I know in the world usually risk like 1% or 2% of their accounts on each trade. Risk management is easier said than done. A lot of people, even after explaining to them risk management, they will still go ahead and do otherwise because of the emotions, the emotion of greed. If I put this amount, if I put this amount in this trade, maybe I will end up making more so amount. Or imagine that you have a well-defined setup now, right? And then you risk 1% on that setup the first time you were profitable. You risk another 1%. It was profitable, right? Maybe the four times. The fifth time you want to add an extra percentage into that risk management. You want to beef it up from that 1% to like maybe 3%, 5% sometimes. Depending on what, let's say you need money at that moment, you're like, okay, this is my strategy, good. Let me just put 5%. And before you know it, maybe that's the time that it will not even work. Okay. And let's even say you put 5% in that trade and it works. You're already building a bad habit. You're already on the track to losing everything. Because let's say you put that 5%, you won now, right? And you remember that prices are actually random. Your winning and losing trades rather are random rather. Okay, meaning that some trades you can take three trades wins in a row, maybe two losses in a row. You don't know, it's just in between, right? And now let's say you took five in a row now, whereby you're happy and you're risking for 5%, right? And you won. Let's say the sixth one now is probably what the trade that you're going to lose. I'm just being hypothetical, an example. And then you said that okay, let me just blow up the account. Let me risk 50% so that if I win this one, I'm going to have almost doubled my account, and I'm already making big money right now. You understand? And then you risk it before you know it, bam, you lost the trade. Okay, and then when you're even about to lose the trade, sometimes you will not even want to close the trade yet until it keeps going down, and then hit your stop loss. You will have cancelled your stop loss safe. You will have removed your stop loss from the trade that you're hoping that it will reverse. You understand? Because you don't want to lose 50%, so you remove the stop loss and hoping that it will reverse. Before you know it, it just keeps going down. It won't even reverse, and before you know it, you're already down 70%, 80%. You understand? So that is the situation where you don't want to find yourself, because apart from the money you're going to lose, it's going to have a psychological effect on you, right? The pain you're going to go through of that loss alone might even make you be forced to decide to quit trading entirely. Okay, you just need to stay within that parameter of just 1%. Remember, I told you from the start that it is not about the percentage you're risking, and it's not about the monetary value, it's about percentage. So if you're comfortable with 1%, right, and you're checking your trades regularly, and you're saying that yes, you're being profitable with just that 1%, you can now decide eventually, you can now decide to increase your capital from outside, right? Fund your account with more capital. And when you fund your account with more capital, you keep risking the 1%. Now that you funded your account with more capital, that 1% will now become more based on you funded your account. There's no need of increasing the percentage. Do you understand? So that is how risk management actually works. And a lot of people struggle with risk management due to the explanation I just gave you now. A lot of people always struggle with risk management. Okay, so that was one of the reasons why I said that you can be taking my trades. You can even be taking my trades while you're busy learning your own setup, getting used to it. You can be taking my trade. But the reason why most of the time most people still take my trade and still are not profitable is because of risk management. Right? That's if you're taking my trade, you're not busy doing your own when you've not yet have a well-defined um, structure to be trading with. The reason why people still take my trade and they still lose money is because of risk management. Once they take the first one, they win. Second one, they win. They will want to increase the risk in the next one. Okay, before you know it, they start getting into this spiral of let me increase it more. Let me, you understand? So just that's the way you can trade like a robot. Like a robot is to just focus on just the percentage that you know that yes, this percentage I'm comfortable with it. You understand? So that is why I usually advise that you trade with a demo account first. While even taking my trade, you're even taking my trade with a demo account. The reason is because so that you can, apart from getting a feel of the app, like the Bybits on how to buy and sell, it's also about getting a feel of risk management so that you can start operating from you can start operating from that reality of risk management. A lot of people think they understand risk management. They know you tell them risk 1%, they say okay. But when it comes to doing it now is the problem. That is where a lot of people sabotage, right? So they are not operating from that mentality. You understand? Because a lot of people now, let's say for example, we're talking about rich now, right? A lot of people understand that yes, what it takes to be rich, what to do in order to be rich, right? But a lot of people are not operating from that mentality. When it comes to doing those things now, they're not operating from that mentality. So it takes time and time and time before you now start building that experience in that reality. Sometimes a lot of people even make mistakes along the way. When I started with risk management, I was even risking 20% on one trade. Even when I was hearing people saying just 1%, 1%, I still want to try it and risk 10%, 20% until I started losing money and then I started understanding. Then before you know it, I told myself that I'm going to focus on just 1%, nothing else. Let me just see how it's going to be, right? You understand? So it's okay to make mistakes as long as you learn from them. That is the most important thing. So let me just take a recap. I talk about having a well-defined setup, right? Then I talked about being patient enough for that setup to develop, and then I talked about some of the techniques to in order to be patient by like having other sources of income to help ease the pressure while you're still learning, so that you won't bring your frustration that yes you need money and bills to pay bills and all for the meantime into trading, because trading is a long-term game. Just like you're going to school, right? It takes time. It's a high income skill, so it takes time to develop. It's not something you're just gonna come and then you understand. So I'm backtesting your setup, right, to help you build confidence in your setup. It takes time, right? And then risk management. Even if you're going to be taking my signal, you need to first of all have traded with a demo account and have a feel of risk management. You check. You be. I feel like you should personally also be recording your trades. Have a notepad or a jotter, or if you're on your notepad on your phone. If you take the first trade, trade one, how much did you risk? You understand? Or, so and then at the end of the trade, how much did you lose? Is it the 1% or you made an extra one? You understand? Just structure it like that so that at the end of let's say 1 month, start from the first trade, check it. What did I risk? What did I risk? What did I risk? What did I gain? So you just made the whole calculation, right? Okay, I risked total of, let's say you took 30 trades, right? I risk, let's say 30%. That's total of 30%. I won so percent minus it. This is the profit and the loss. You understand? So then that way you're not, once you see that, you understand, you start building confidence. Once you're able to take those records and all, you start building confidence. The only way you can build confidence is to look at your past records. I'm supposed to put that as well as number 6 or number 5 say is to record your trades. Let me put it in number 6. Number 6 is to what? To record your trades. So you should always record your trades, right? So when you're doing for risk management, record it so that you can look back and say, okay, yes, this were the trades I took. And apart from risk management as well, for your setups as well, when you now want to start trading your own setup, you can look for, there are different ways. I usually use what they call it, Discord as well to record my trades. Trade one, I'll take a screenshot of the before the trade and after the trade, and if it was profitable or not. That's when I already have a defined direction strategy. So that once you've done that for the like next 10, 20 trades, right, you can go back and say, okay, this strategy before and after. How did it play out? Now you're getting more, feel of the how the strategy actually is, and how to develop it more, what to take out and what not to do. You understand? So recording your trades is very, very important. Okay. So number five I wanted to talk about is the setups now. When it comes to the setup, okay, before that, let me look on risk management. I actually did a few stuffs. It's been a while I did this. So take for instance, I was talking about risk management, right? Risking 1%, and I said something about Man City. I checked their previous seasons, right? And then you see that zero stands for loss, right? One stands for win. Zero stands for loss or draw. So we're not taking them win or draw. We're just taking them win. So if they lost or they drew, you put it as zero, right? So after how many matches? I think about 20 matches, risking 2% each for each match, right? Total wins they won was 12 wins. Total loss was just 8 loss. So if you say total won 24,000, risking what? With a one sorry, with a $1,000 capital, with $100,000 capital rather. Okay, with $100,000 capital. So if they are winning 12 wins and they lost 8, and I'm risking 2%, okay, the wins will amount to 24K, the loss will amount to 16K, and I'm actually risking what? 2% of the account. Okay, the total profit and loss will be 24 minus 16, which is $8,000. Do you understand? And you're actually trading, you're doing that with $100,000 capital. So you're getting 8,000, which is like 8%. 8% is 8,000, right? Of 100,000. So you can't be comparing somebody using 100,000 now with somebody using 1,000. If you're using 1,000, $1,000, 8% is going to be what? $8, right? I don't know, $8, right? Maybe $80. $80, sorry. Something like that. Yeah. So that's just it. So you see that this one now is a well is a sure guaranteed way of making money, but over time, right? So a lot of people do this. I know a lot of people who do this, and they are making money over time. They just put it that way, and then they develop a system around it, and they're not doing anything like this. Is just how risk management and building a system works. You need to build a system around everything so that you'll be able to track if you're making money or not. You can't just there are some people that do it the other way around when it comes to this is what professional gambling looks like, right? You have a well-defined strategy, and you're not just going in. Let me put 5K today. See, Man City and Liverpool. It's like Man City. You're just going in with just prediction that you feel like might work, might play, and you're saying you're putting $10,000 today because you feel like Man City will win. That's why you're putting $10,000. Tomorrow you don't really feel like they will win. You put 1,000. You understand? So, but the one that you backtested it that okay, even if they win or not, it's just 2%. You see that now you're trading, and you're predicting like a machine. And then at the end of 20 matches, right, 8%, which is super nice. It's just that depending on your capital, right? So that's just an example of how it actually is with the example. So I hope I've been able to explain to you guys a lot of all of this. So and then the number five, which we're going to talk about now, is just the setup. Okay, just your setup, how your setup actually is, what to do, and how to actually go about your setup. Okay. So with this, I'm just going to go into the charts and talk about the setup, right? Support and resistance. This is exactly how the setup actually is. Don't forget that if I'm actually drawing a line like this, when it comes to support and resistance, it doesn't mean that price always have to come on a straight line like this. No. Okay. Most of the time, price will just give you a lot of jargons in between, but you just have to be able to recognize where is your support and where is your resistance. So let me even use this one here. Just forget about all of this shit I'm actually doing here. This is good. Go to Bitcoin. Okay, so and this is Bitcoin chart now, right? And this is on the, and I thought to just support and resistance, right? If you look at this below here, this is just more like support level here. Can use this, right? Because price, I remember I told you that how do you define the support and resistance level? Looking at this chart, I said that price would have to have tapped that level at least twice, right? And then if you look at this level here, price actually came here, right? This is a support, and this is another support. So this is the third time price is actually tapping this level. This was the reason why I actually took that buy at this point here. Okay, so let's just say we decided to map this zone out as our support, right? Why is this zone our support? It's because price has actually tapped this level here, one, two, and then it's coming here for the third time. Okay, and one thing you need to understand is that prices are always changing. You should not be sticked to one level forever. Tomorrow now, like, you understand, that's why I usually advise that when you want to start your day, check the chart, clear the chart, clear the chart, and start with a clean analysis, and you follow the same strategy, right? Once price has tagged a level twice, is already valid for a support level or a resistance as well. Okay, so this is the point here now where I actually took that buy. Okay, and where did I take it to? I actually took it to the middle of the support and resistance, right? So price tagged here one and then rallied, tagged here the second time and then rallied. So this point here is where I will actually be calling my words, my resistance, this point here, because price actually tagged this point one, right? Came back, tag it again, and then came into this level here, and then it's coming back to target the third time. Okay, so this is where, and you can actually see in between that there are lots of jargons in between. You can see it for yourself that there are lots of jargons in between. See, jargons. Am I looking to trade all of this? No, I'm actually just looking for the point where I know that yes, this is clear support and resistance, and on the daily. You can do that on a 4 hour, or it depends on the time frame you're at. As long as you've been able to eyeball the support and the resistance, then you're fine. Okay. Also, I want to reiterate something because I actually said something initially that you should go to the lower time frame and then look for what a break and retest. Okay, but I felt like a lot of people are finding it very difficult to trade going into the lower time frame to look for a break and retest. So what you can do is just once price gets to a support, I want to simplify it a little bit more. Okay, so what you will do is once price gets to a support level, just buy. Okay, the only thing we will be working on now is the pattern that is actually playing out at this support level, what you should be looking for before you buy and all of that. Okay, and that will be on the lower time frame. So let's say price is coming to this support now. What you can do is just buy and then take your profit at the middle part, just at the middle. That was exactly what I did. Okay, I just placed my buy here, and then my take profit was at the middle of the support and resistance, right? And then I just put my stop loss below all of this stuff happening here. This was exactly the trade I took here. That's just it. Simple trade done. Do you understand? It's not that difficult to actually play out. Just this. Okay. Now what I'm actually expecting is maybe if price is coming into this resistance here, then I'll do the same thing, right? And then I'll take it to the middle. I'll just put my buy here. So forget about going into the lower time frame and start looking for break and retest. I feel like it's a little bit complicated. I just want to simplify it as simple as possible. Okay, just buy and then take your profit at the middle. How do you even define the middle? There's what we call Fibonacci retracement, right? You can just put it here, from here down to this low here. This is your middle. At the middle here is 0.5, and then we have 0, we have 1, right? You can edit it, and then take remove the coordinates, the style rather, take out the rest and just leave the 0 and 1 and then the 0.5. I can actually do another video explaining to you how to edit it and take it out, so that once you start from this top down to the bottom, the middle will now be your 0.5. Just take your profit at the middle here. That's all. You see that I've been able to simplify. You cannot do the same thing for lower time frame now. You can go to 4 hour time frame. Let's say we are not trading the daily time frame now. We want to be looking for trade on the lower time frame. Don't forget that lower time frame has lower probability of playing out, and higher time frame have higher probability of playing out. So let's say we're going to the 4 hour time frame now to look for what support and resistance. What do we see here? Right now is in an uptrend. There's nothing developing. The only time we can actually start looking for support and resistance is when price, let's say, maybe starts consolidating properly. That we're sure that it's consolidating, right? Then from here we can start thinking of taking a buy from here. Take a buy, target the middle, close the trade. That's all. If it rallies to the up, take another buy from the top here. Target the what? The middle. Target the middle, right? And then that's the end of the trade. Okay, no need of going into the lower time frame. I feel like it's a little bit complicated for now. Okay, then if we look at this here now, we'll see that we had a high, low, high. Then let's say something like this. It's more like a so I usually don't like trading on the lower time frame because it's a little bit very choppy, right? So we can define this as our support and resistance. And then if you look at it properly, we're not coming into the level. Hold on. So you can see it, right? It came to this level here, this point here. 1, 2, 3, right? And then we had this weak, nasty weak here into this level. Then before we came back to this top. So it's not really giving us a very clear. The only time you can be looking to trade it is maybe let's say it starts coming back lower. There you can just take a sell, target the middle, right? Put your sell here. Put your maybe your stop loss somewhere around here and target the middle here. As you can see, it's not even a good risk to reward. This is just 0.6. Let's want to be targeting a 1 to at least 1 to 1. You can put it this way, right? So you can see that just target it into the middle. That's all. Okay, just to the middle. As long as you've been able to define the support and resistance, and you're sure that yes, this is a clear support and resistance, then just target it to the middle. I feel like this is a simpler strategy to trade. So far, I've been able to teach you guys 3 different strategies, right? The first one is just that was the beginning where I said you just look for what a break and retest strategy, right? Once it breaks out, it's coming back to retest, right? You just take the buy, right? Take the buy here, target the last high, which is here, right? And then put your stop loss below here, right? Something like this. Target the last high, put your stop loss below the last low. And what is the last low? Is here, right? This was the last high. That's the first strategy. And then I told you that this is good for a direction play. Let's say on the daily time frame, you've been able to map out your support and resistance. Then you go to the lower time frame, and let's say price is at support and it wants to start trending higher. You can just be looking for a break and retest, right? That is one. And I feel like it's a little bit complicated. It's a combination of 2 different strategies, right? Support and resistance, and then break and retest inside of it on the lower time frame. But the simple thing you can just do now is to, once you've been able to define your support and resistance, like on the daily now, just like what we had here. Let's go to the daily. Once you can look at what we're actually doing, look, you can see how very little it is here compared to this bigger picture. So the higher the time frame, the higher the probability of it playing out. Most of the time on this lower time frame, you just get a lot of choppy price action. So right now, what we can do is, since we've been able to define this as our support, you see how easy it was to trade on this level here, and then this one as our resistance. You see that when it was coming to this level, that was the reason why I took that buy into the middle. Just put the buy here, into the middle here. right? The only problem you're going to be having is defining that this is a support and resistance. Okay, see the way it's coming to this, so just buy. If it starts going against you, you can just cut it, right? Or allow it to even take out your full stop loss. It's just 1%. Okay, so that's just how the easy way you can trade it is no need of going to the lower time frame and looking for a break and retest. Just once it comes to the support, just buy it and leave it. Okay, once it comes to your middle, just take profit at the middle area, just the middle. Do you understand? And then if you start trading below, you can just cut it for a 1% loss or even a scratch if you don't want to take the full 1%. Okay, so that is when it comes to strategy. So all you need to do is just try your best to develop it, practice it, go back to in time to look for where support and resistance is actually playing out. That's what we'll be doing in a couple of days. We'll just be trying to backtest and look for support, and you can even start making a lot of research on your own purely based on just support and resistance and taking profit at the middle. Okay, so that's just, you can see that we had a lot of choppy environments here, right? All of this, you can see all of this. I'm not even all of this playing out inside of all of this. I was not even paying attention to them. My own is just the high here, the edge, usually the edge, not the inside. The edge, edge. Okay, the edge, not the inside. Okay. Once I've been able to recognize the edge, not what is the rubbish that is actually happening on the inside, then I'm good to go. Okay. So that is just how, that is an easy way to start recognizing support and resistance. Is to start looking at the edge, not what is playing on the inside, the edge. Okay. So that's going to be all on this session. Okay. If you actually like it, you want me to keep doing videos like this, just kindly let me know. Okay, and then we'll talk about it. All right, guys, that's it on this live session. Not actually live session, a recorded session. Okay. I'll see you guys in the next one.